This is our Forex blog for June 24th. Like most days, we really want to buy the strong pairs and sell the weak ones. Today, as in much of yesterday, the dollar was very strong, and we also had a very strong yen. Between the two, the yen has a much stronger daily, weekly, monthly trend, so you would prefer to be trading the strong yen against one of the weaker pairs. The euro, as we all know, has been weak recently. Had a nice little rally up yesterday, then some selling. I mean, it was selling off most of the morning and had due to the Greek news, it had a nice little bounce. But again, it went back to its weakness here. The CAD was pretty much weak all day. So and also the pound until about 5. This was the first time it really had a lot of statistical strength, and then that strength continued. But until 5, you could have also traded the pound yen by selling it. So let's start with the euro yen because that was the highest odds one. We all know how weak the euro is. And we had a weak euro and strong yen. Just looking at the chart, some of the trades I see, when it's above the hourly, you mainly want to buy it. But on this pullback right here, it had a lot of weakness. So if you did buy right here, notice on this one bar up here, it didn't have that much strength. You would have had to get out of that trade with a small loss. When it breaks underneath the hourly, it typically continues down. It continued down to and got a trend reversal signal, and the weakness disappeared. This is a decent place to exit your trade with a very small profit, maybe 6 pips. Usually it comes back up and tests the hourly here, and therefore, if it can't get above it and it starts to go down, you want to sell. Sometimes the currency will chop around at the hourly. So whether you want to trade the hourly or wait for a breakout, it's up to you. But this one was more likely to go down than up. The yen was very strong, the euro was weak. Once it broke above the hourly, you're doing a counter trend trade. You're buying a weak euro against a strong yen, and of course that breakout here failed. So probably most of us wouldn't have taken that. It kind of came down underneath the hourly, went sideways, broke down right here. Another good entry, and then it just absolutely collapsed. Extreme weakness. Went right down to the lower containment band. We had some counter trend buy signals on the way down. Usually previous day's low, the lower white band is the end of the move, and you're out of your trade here. Sometimes these continue for a couple more waves down, so you certainly might have sold this counter trend move up, and again it pulled back. You got another counter trend buy signal right near the lower band, and after this one bar of weakness, it fell off a cliff here. So you would have probably not made much on that, maybe 6 or 7 pips. One of our systems is an Elliott two-wave pullback. Usually after a big move down, the market will go up, pull back, go up again. You want to get short near these first fib targets. So you have a nice small 20-30 pip move here, and then another 60 pip move here, where it double bottoms at the low. Once the currency double bottoms a few hours later, that's a pretty high probability place to buy. So you would have been in right here and just kind of, you're still waiting for a nice little bounce, but your stop's pretty much near break even right now. You're just waiting for the bounce, and sometimes it doesn't happen, and sometimes it takes a few hours. But we had a weak euro, strong yen, and especially here at 5, 6 o'clock, that's when the euro was most likely, because the yen had mild strength, but not incredible strength. So if the euro happened to have more strength than the yen, it's going to go up, but not much. You don't want to ever buy two green ones together. But once this thing got weak here, weak at 230, there were some good trades with that. The CAD was weak all day, so you're looking to sell the CAD yen. This one started the day off underneath the hourly and wasn't able to get above it. You got major resistance up here. Previous month's low, 20-day moving average, 10-day moving average, weekly pivot, hourly moving average. There's about 5 different sell zones right above you, so it's not likely to go up. And the trend's down, weak CAD, strong yen, and you probably wanted to just wait for this sideways move to finally break last night's low, and you're short right here, your stop's right above the high, and this probably would have been your profit target. Previous day's low, Fibonacci area, and if you would have got out there, you probably made about 15 pips. If you really believe the trend's going to go down, you can use our trailing stop method, or just keep yanking every time it makes a lower low and kind of makes a small pullback up. Keep yanking your stops down. And usually, currencies are this week will make 1 or 2 waves. So here's the first wave down. You might have drew your fibs off this and exited the trade somewhere around the 1.618. It did go down another 15 or 20 pips. So some exit methods work better sometimes, and other ones the next. this support area, which got broken, now becomes resistance. Previous day's highs right here, and when it came up and the IntelliTrend went red, pretty high probability short, and that one, was the much more smooth, straight down 30 pips in about a half an hour, Phenomenal trade. Because we knew later in the day, this one just was super weak, and the yen was super strong. Same thing with the dollar. When it went strong, you wanted to buy the dollar CAD. I would bet the dollar CAD was above the hourly most of the day. So it was. You can see a nice little sideways range breakout right here. High probability, in at 89. Went right up to this previous month's high, which is a major sell area. Kind of ran out of steam up here. You wouldn't have made much in that trade, maybe 10 or 15 pips. You would have expected the hourly pullback to be a place to buy. It broke underneath there. So if it comes back up to the hourly and can't get above it, you want to sell, but it broke above it. Because the earlier trend was so strong and the CAD was consistently weak today, you might have wanted to buy right here. And then this decent pullback right here with a counter trend buy signal in at 02. And you might have got out here at the double top with about 18 pips. Or if you used our intelligent trailing stop, it would have kept you in there all the way to the high. Let's add that to the chart here. FX IntelliStop. And if you got in there, it kept you all the way into this trade up here at 36. So I would have been buying here at 04. It made 32 pips on that trade. And the IntelliTrend's trailing stop is a pretty decent way of getting knowing the direction too. This one fell, it made money. It went long right here. It kind of went sideways. The stop never had you out. Went up, you made money. You shorted here, obviously you lost on that one. But you're fighting the trend. I mean, this one was in an uptrend, so if you only took buy signals, pretty much made money all day. The Swiss was on and off, strong and weak, just like the euro. It didn't, so you might have got into a trade, had a small or medium or big win once, and then probably lost in some trades. You wanted to trade this against a weak one, euro Swiss sell, or sell the CAD Swiss. Here's the CAD Swiss. Oh, I already have that up on the chart. Notice it's also underneath the hourly, so decent sell. Went sideways for a couple hours, decent sell, made money on that one. When you're near the lower band, this is usually where the price reverses. So if you got short right here, you have a very small profit target of only 10 pips, and it came down with even less weakness than it had before, so pretty much a no-brainer there. And this is another perfect example of an Elliott two-wave pullback. You draw your fibs on there, and either the first or second fib target is going to usually hold. This one, sorry about that. Let me take this real quick. I'll be right back. Hey, babe. Hey, babe. I'm doing class, so I can talk. I just told you we'll be back. All right, sorry about that, guys.